This is Joe Rabil with Rabil Stock Research. So a lot of movement this week. We've got a lot of action. I want to talk about that. I'm going to go through the market, going to go through some requests that came through, but I want to start out with a lesson on how to look for a reversal and some of the key things that I try and identify to try and really improve the risk reward of that type of an entry. I don't want to get in too late and I don't want to get in too early. I'm going to show you things that I'm looking for that I think can be very helpful. All right, let's go ahead and get going with this lesson. I've got the chart of Disney up. In fact, I've got my grid with 4 time frames. All right, we've got a monthly in the bottom left, weekly bottom right, daily in the upper right, and an hourly in the upper left. Now, I want to focus in on the weekly and the daily, but I do want to talk about how we can use the upper time frame. So this would be the higher time frame. This is the lower time frame, and this is the upper time frame. It can be very helpful in seeing kind of a broad view and give us a real feel for whether there's a potential good trade coming. All right. Now, if I'm looking for a reversal, I do want to go back and look at the bigger picture and see what's taking place. But when it comes down to really putting the trade on, these are the 2 time frames I want to use. So we're going to start and just look at what took place. We had a big drop down into 2022. Tried to make a new low at the end of the year, didn't really follow through from that, but then came down, went sideways and then came down at the end of 2024. And notice what happened. We actually went to a new low. You see how these 2 bars, they're narrow range monthly bars, went to minor new lows and had 0 follow through. All right, this is a huge tell. If you're watching a stock and trying to determine whether it's making a bottom or not, see what happens when it hits a new low. See if there's follow through. We should have a big down bar if this is a true breakdown. This is a failed new low, and with with really no follow through whatsoever. The other thing that we notice is that the MACD does not hit a new low. So we've got MACD divergence on the monthly chart. And we have 2 narrow range bars showing there's no downside follow through. So when we get this green bar to the upside, we could start to think that there's a pretty good chance that we're going to break through this 18-month moving average. I want to point that out because I know I was going to get some questions just based on how I'm looking for a reversal. So if I go to this time frame on the weekly chart and I see that we've broken the downtrend line of this last leg to the new low, so that really corresponds to this bottom here, or if I drew the trend line, it would be like this, okay? So we're going to a new low, and you can see the undercut pattern taking place on the weekly chart, and then we get pretty little follow through, and then the dynamics back to the upside, and I want to blow this chart up so you can really see. Now, so we're creating the start of a reversal. A break to the upside is the 1 in a 1, 2, 3 change in trend. Now, if I have the right dynamics behind the 1, I don't necessarily want to wait for the 3. I want to buy on the 2. This is really where I want to be buying a reversal pattern if I've got the opportunity. Now, some of the things that I'm looking for to correspond is I do want to see these green, you see the size of these green bars, nice green bars to the upside with pretty good strength over a 3 to 4 week period. That causes the MACD to show some strength crossing back above 0, but more important to me is the green DI. So a lot of people like to wait for the ADX to get going, and I do when we're in a trend. But if we're watching for a reversal, we just need the green DI to get going here. All right, if we get a move to the upside and we get a pullback, and green DI not only breaks out above all these prior highs in red and everything, we get the DI, which again is the strength of the buyers holding this 25 line. All right, you can see light volume. So I like to see the volume pattern, strong volume to the upside and then light volume during the pullback. But green DI holding well above red and holding around the 25 line is a really good sign. Now, when we have that in place, we want to go down to the smaller time frame. Remember, we're trying to use this as a trading signal. You can see what happened on this. It basically rallied up to the 40-month moving average and then just fell right back off. Now, that's not surprising based on the way the monthly was set up. If the monthly was set up differently, or if it was holding the 18-month or turning around, then we could play it for a bigger play. But in this case, I really just want to take one leg, and I can see that I'm trying to make it from the 18 to the 40-month moving average. So I can use the upper time frame to really kind of guide me in terms of telling me what the targets are. So we can use this reversal in Disney on this pullback. And one of the things as a minimum criteria, we want to have the 18 turning to the upside. All right. We don't necessarily need the 40 rising, just like we don't need the ADX above 25. But we do want to see it's preferable for above that 40. But most importantly, we want to see the 18 rising. Right? It should have been falling and now it's rising. And again, we want to see a minimum criteria of momentum improvement as well before the pullback. Now we get this pullback. Now, when you look at the approach, what I like to do and look for is a counter trend setup. That means the 18 on this time frame is actually below the 40. So we're going the opposite. So we're getting a pullback. So on the higher time frame, we're getting a pullback to a rising 18. Okay, this is the pullback. Well, that's what this is. We want to look for this ABC correction type of a pattern. We want the MACD, which was overbought, to work back down towards the zero line. And we want the ADX, which was strong to the upside, to be really low during the decline phase. We want to show no real sign of red breaking out and causing the ADX to move up. That shows me that the buyers were strong to the upside and not strong on the pullback. So, or the sellers were not strong on the pullback. So we get this correction, but we get the 18 to cross down below the 40. And then we're looking for a reversal back to the upside. Now, I don't want to go into too much detail on that right now, but I just want to explain, if we're trying to play a reversal, we want to look at the upper time frame and make sure there's some signs that there's a potential, right? It doesn't have to be a big reversal like the start of a 2 to 3 year trend, but we need to have the potential signs. We want to see some sign of momentum divergence. We want to see some sign of new strength, and we want to know that we have some room to trade. So if I can enter this stock somewhere in here, I know I've got room up into this region. It's a pretty good trading play. And it can also define our upside target. So that's how I would go about using a reversal. Use their 1, 2, 3, but try and enter on the 2 to really improve your odds and improve your risk reward scenario. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. Before we get going, my comments are for educational purposes only. Please do your own due diligence before making any investment decisions. Okay, so I'm going to go into some sectors, but I did want to answer a viewer's question. And the question is, do you find that buying opportunities all come around the same period in time in line with what the general market's doing? Or if a specific sector is moving, he mentioned the consumer staples had a pop, and are you seeing all those stocks happen at the same time? And or if the growth were to turn back up and make another move after pulling back or consolidating, let's say, for a little while, do you see all the same signals developing at the same time? What I've noticed through the years, especially because I go through, I'm a bottom-up investor and I like to go through individual symbols. And the reason why I like to do that is that if we looked at a specific sector, we will show, and let me just put this to you this way. So let's say we're looking at the XLF, all right? We're going to have our leadership stocks that are really just the absolute best of the best inside that sector. And then we're going to have, the worst, the ones that you kind of want to, you don't really want to be in. They're kind of the worst names in that sector. All right. Now, what I notice is that when we make a bottom in these, when these finally make a bottom, these stocks, these top 5 or whatever, are already going to be like 50% off their low. They're already going to have made a move. So it doesn't work in the way that you might think. You might think that everything's giving a buy signal within the same 1 to 2 week period. what I've noticed is the reason why I actually like doing this bottom up is that I'm looking at the worst stocks. And if the worst stocks look like they've made some kind of a selling climax and some kind of a bottom, then I know I can start to look for new signals. And some of these might already be gone, or they could be stocks that I could be looking for a pullback in, these top names. All right. I know they've got good momentum. They've already kind of kicked in. Then there's this next set. This is really where I think you can make some pretty good money. We know that we've got the worst names not anchoring, not pulling down the sector anymore. So we can start to look at this next group. This is where, we've probably missed the absolute top names. And again, you could play those on a pullback, but then you want to be looking for new rotation in the names here that have both good momentum and good relative strength. So hopefully that answers your question. Now that will hold true not only for a sector, an individual group, but also for the entire market overall. But I like to look at it from sector to sector. And in most cases, we're going to be able to find sector action that looks bullish after we see a move like this. Like I'm still finding stocks in the financials have been going up. They've been going up a long time. We're still seeing new rotation in individual stocks. This has been going on months, right? And what I like to see is the strength in this relative strength line that tells me, okay, I can continue to play these. I've got good momentum condition in place, both MACD and ADX on the weekly chart is kind of the key for me. All right. And then I want to go through the individual names. Now, the person who was saying that what the work they do, it's probably like 50, could be 50 names up to maybe 500 in any specific day that they're passing his screen or whatever. I don't think you need that many, but I would say, somewhere between 50 and 150 is a good working list to make sure that you've got at least a couple. You need to have some of the bad names too, so that you know when they're bottoming. That's the benefit of going through a lot of stocks. That's why I think what my service provides is a little unique from that standpoint, because I do go through so many individual stocks. All right, look, the XLF does look attractive. We need a little bit of a pullback in some stocks, but we also have some new names rotating up. I also want to point out, look at a few other sectors. So look at what this healthcare sector is doing. We had the breakout. Now, just because a sector is breaking out doesn't necessarily mean anything. All right? I mean, it could just be pulled up by the market. We want to make sure that's not the case. So we look at this relative strength line, and you can see not only is the price breaking out, but we're getting a nice turn in the relative strength, and we're getting very close to turning the moving average of the relative strength. So really important to see that. The other thing that we can see is what's taking place in the utilities. Utilities continue to show nice strength. Look at the relative strength turn. You see how this has been declining for almost 2 years, year and a half. Now we're getting a nice turn in there. And then lastly, let's just look at this. I mentioned all these last week, really over the last month, what we've been watching for. A lot of these defensive type sectors and or interest sensitive sectors are showing nice improvement. Again, look at the relative strength confirming that that action on a price basis. That's the combination we do want to see. All right. I want to switch over and go through the individual. First, I'm going to start out with the QQQ and the IWM. I think this is a great exercise each week. And what I've been leaning on in this QQQ is, we've broken the trend line and we're forming the 2 on this rally, but we need to come back down through here. Now, if this comes back down through here, we also want to see the relative strength doing that. All right now, we've got weakness in relative strength, but we don't really have the confirmation on a price basis. So we can have interim weakness on a relative basis that doesn't cause a breakdown. It's just a consolidation. And if that takes place, then we know that we can reemerge again and the relative strength can kick back into gear without breaking the trend. So this is really important to watch this. And if this breaks this prior low, we also want to break in the 18-month to kind of confirm that there's real damage being done there. So that's kind of what I'm keying on this QQQ. I know right now we've had some weakness. It does look like it wants to form a range, but I think as long as we stay above this low here at 425, I would still consider this, and above the rising 18-month, I would still consider this an interim correction and not a big topping pattern. All right. So just kind of want to keep an eye on that. Now, what is troubling is the fact that we can't seem to get this relative strength line in IWM to really kick into gear. And I for one, I would really like to see the small caps play a little bit better. It's very rare to see them pretty much underperformed for this long of a period. Doesn't really happen like that. I mean, we had this period here where they showed a little bit of improvement. It was really flat though. Other than that, it's been underperforming large cap. And I've followed this for a good 30 years, almost 35 years now. And the times where this line, this relative strength line is moving up relative to the S&P are the best periods for the general market. All right, I do want to go through some requests that came through. So we're going to look at this ETH. Personally, I just think this was a little too violent in the pullback. So this move to the downside, you can see the volume associated with it. Look at the ADX associated with it. It's trying to hang on and hold the 18-month. You see how we've pulled back to the 18-month line? We're trying to hang on there, but just the violence in the way that it got there is not really all that appealing. One of the things I like to look for is if we get the ADX to go up based on the red, based on the sellers, then we can be a lot more patient waiting for a turnaround. We don't need to be in a big hurry. If the red can't get the ADX to cross above and it starts to turn, then I think we could be a little bit more aggressive. But I think we got to give this a little bit more time. Yeah, it had a spike down here. So one of the things I do want to point out, you see this big tail? The big tail did cause this DI line to go up. You got to understand how these are calculated. So in this case, it's making it look a little worse than it actually is. That's not really my concern here. My concern is this big red bar and the decline, this whole move down. And now that we're sitting back on support, I don't think there's much downside here. But I also don't know that I want to be in a big hurry unless I see some signs of improvement. Definitely real selling when you look at the daily chart. All right, look at something like J&J. Look at the move. So we talk about healthcare improving. Look at the relative strength line, which has been down since the beginning of 2023, and J&J starting to show signs of improvement. We're getting back above the 18-month line. Now, what I want to see, we're showing signs of nice momentum on the weekly chart with the ADX moving and the MACD getting up. We need to hold on a pullback. You know, if we can pull back to 160 or something like that and see both of these lines not give it up, I think this is in pretty good shape. Really a pretty nice setup if we get an orderly pullback from here, which I do believe should have pretty good support at 160. Okay, so look at this Kroger. So another area, this is a defensive stock, a grocery chain, starting to cup around, show improvement. I like the pattern that's developed here. We had the move to the upside and we came down, and because this rolled over, I really didn't want to play this move up. Now we've come back and we've formed another. So we're forming an inside swing here. Do you see how this swing? So this is the bigger swing. And then we formed an inside swing here. And now we formed another inside swing. So when we start to do that, we know we're kind of coiling for a new move. I do believe we need to get back above this prior high to kind of kick things off, but I like the way the MACD is forming sort of a little double bottom here. Green DI is still above and still in control of this pattern, but I'd like to see this move back up to kind of confirm that things are kicking back into gear. All right. And then look at something like McDonald's showing signs of improvement. It has a tremendous amount of support at 250. We've gotten back above the key moving averages, but it does still look like a trading range to me with resistance at 300 right now. The way I'd start to feel better about this is if we got stronger move and we got better green DI. Do you see how, even though we've made a nice move off the low, green DI really isn't moving. It's still well below the red. I don't think this is ready to break out of this range right now. I would expect more kind of sideways action, at least for now. The good news is there's not much downside in it. Look at Microsoft. It had the down move, all right? It had a little bit of acceleration in the down move on the earnings. You can see that we have real selling here based on the ADX. You see how the red caused the ADX line to get up here, and that's above the green? So now we know that the bears are kind of in control, and we need to switch that. Green's going to have to, the buyers are going to have to step back in and turn things back around. I personally don't really like this below the 18-week. That's 428. So we're going to need to see that recovered. The longer-term trend is still up above the 18-month line. So I'm not really concerned about the bigger picture at this point. Again, unless we come back down below this prior low, then I'd start to get a lot more worried. I know I'm kind of getting questions on NVIDIA every single week, so I'm going to go ahead and cover this if I keep getting questions about it. I personally think the way this is playing out is we had this monster move. It had one move up and then consolidate and then another move. When you see this little ABC kind of rally like that, big move up, consolidation, and then another move, this is where we should be looking for an extended sort of consolidation. You can see all the tails, the size of the bars. I think this wants to come in some. And I think the healthy way this could play out is if it just went sideways from here and consolidated sideways. And it could do that. Again, as long as we stay above this prior low. On a lot of stocks, this prior bottom is really important, I think, to the bigger trend. As long as we can stay above that, then I think this is okay. In this stock, it could undercut that low and still be okay because the 18-month is so far away. The bottom line is I think we're into a consolidation pattern, not necessarily a topping pattern or the ready to go up again. I don't think we're ready to take off, and I don't think we're ready to break down. I think it wants to digest the gains that it's had. Last stock, real quick, is Visa. Look at the way this is turning. Look at so this is a pattern I constantly on the lookout for. First on the monthly, we get a move to the upside. We get the pullback to the 18-month. Pinch play, right? Green is still above red. Not a lot of strength in the trend right now, but when we go to the weekly, we had a nice move to the upside with good strength, and then the correction had no strength, and then we get a zero line reversal with confirmation here with the break of the downtrend line. Good stock, looks attractive. Certainly now we want to look for some kind of a pullback. Thanks for watching today. If you have any stock requests you'd like me to analyze on next week's show, you can send them to stocktalk@stockcharts.com, or you can just put them in the comment area below. Also, if you want to learn more about these techniques, you can go to my YouTube channel called Invest Like a Pro. Have a great week, and we'll see you next time.